Roth conversions can be an effective way to reduce taxes in the long run, but they can also be costly if not done correctly. A Roth conversion involves transferring funds from a traditional IRA or 401k account into a Roth IRA, which can then grow tax-free for the rest of your life. However, it's important to be aware of the potential pitfalls and costs involved in this process. In this video, we're going to discuss how to avoid costly Roth conversions and ensure you're making the most of your retirement savings. Hi, I'm Brad Lineberger, founder of Seaside Wealth Management. We specialize in helping people transition into retirement and stay comfortably retired. I'm passionate about teaching and coaching on financial topics, and that's why I create these videos. If you like content such as this, make sure to subscribe to our YouTube channel and I'll send you more. One of the biggest factors to consider when deciding whether to convert a Roth IRA is your current and future tax bracket. If you're in a higher tax bracket now than you expect to be in retirement, it doesn't make sense to convert some of your traditional IRA now into the Roth because of that large tax bill that you'd face. However, if you anticipate being in a lower tax bracket when you retire, these are the perfect years to do conversions. We call these years your gap years, the years between retirement and when required minimum distributions start, which is either 73 or 75 now, depending on your birthday. Another common mistake is to convert too much all at once. It can be tempting to convert your entire traditional IRA or 401k account to a Roth IRA, but this could result in a huge tax bill that you may not be able to afford. Instead, consider converting smaller amounts over time, especially if you're still earning income and have a higher tax rate. Convert just enough to keep you in a lower tax bracket. Right now, my favorite bracket to do conversions in is the 12% bracket. We can make a case for doing conversions in the 22% bracket, maybe the 24, but it starts to get harder to justify higher than 24%. Number 3, when you convert to a Roth IRA, you'll need to pay taxes on the amount you convert. This can be a significant expense, especially if you're converting large amounts. Make sure you're aware of the tax consequences and have a plan in place for how you're going to pay the taxes that you owe. You may want to consider setting aside some funds in a separate account specifically for this purpose. Number 4, timing is also important when it comes to Roth conversions. If you convert during a year when you have a high income or a large capital gain, it could push you into a higher tax bracket and result in a much larger tax bill. Consider the timing of your conversions carefully to minimize the tax impact. Think about those gap years that I mentioned earlier. This is the perfect time to do the conversions. And number 5, make sure that you're aware of the 5-year rule when it comes to Roth conversions. This rule states that you must wait at least 5 years before withdrawing any of the converted funds from your Roth IRA, or you could be subject to a penalty. Make sure you have a plan for how you're going to use these funds in retirement and understand the implications of that 5-year rule. Here's a tip. If you know that you want to do Roth conversions in the future during those gap years, do a small conversion well in advance in order to get your 5-year time clock ticking and ensure tax-free distributions. Roth conversions can be a great way to reduce taxes and maximize your retirement savings, but they can also be costly if not done correctly. Make sure you consider your tax bracket, don't convert too much all at once, be aware of the tax consequences, check your timing, and watch out for the 5-year rule. With these tips in mind, you can make informed decisions about your retirement savings and avoid costly mistakes from the conversions. Make sure to subscribe to our YouTube channel below to get more content like this. Also, make sure to download our guide on how to save money on taxes in retirement, as well as how to maximize your Social Security benefit. This will help you as you prepare to transition into retirement. I look forward to seeing you soon.